I guess this is how the financial industry handles climate change damage. They call for the real estate market version of a bank run, deliberately invoking a debt deflation crisis. Way to go, guys. Because no matter how the insurance crisis is dealt with, whether you live in a state like Texas or in ones like California or Florida, the results are the same. Insurers raise rates and lose customers. Insurers pull out of markets and lose customers. See, isn't the magic of the marketplace wonderful? But none of these measures alters the second law of thermodynamics. Homes, businesses, communities continue to be battered by frequent damage and destruction. And this damage continues to intensify in frequency, magnitude, and scale, while recovery to the damage falters or fails altogether. Home and business properties lose value, lending and credit dries up, and an economic crisis ensues, followed by default, foreclosure, and bank failures. It's your classic debt deflation crisis. But wait, you say, governments have a response to this. We've done it multiple times in the past. But a climate-induced economic crisis isn't one that can be patched up by a national government in the ways we know about. In other words, the nature of economic crises precipitated by an excess of animal spirits is not comparable to economic crises precipitated by credit crises precipitated by the animal spirits of the second law of thermodynamics. They are not the same. With a credit crisis causing an economic downturn, governments can intercede to stabilize prices, provide liquidity and assurance to restore commerce to the affected markets. But all that liquidity doesn't mean a thing when there's nothing to buy on the market and when built property is destroyed during construction or shortly after completion. The consequences at the local level are existential. The tax base and economic activity, that's local business, dries up. And eventually the municipal area withers and dies entirely. And so it goes. Those effects propagate upwards through the governmental layers, to the county, to the state or province, whichever term is actually appropriate, because keep in mind, this is a global phenomenon, until it gets to the national level. But rest assured, boys and girls, because we can rely on the competence, the well-known track record of the Federal Reserve and the financial sector to have their ducks in a row over this rather obvious oncoming train wreck. Surely the Federal Reserve stress tests have not only fully accounted for the damage or loss of the collateral backing bank assets, but also of the financial solvency of the insurance sector that provides indemnification against the damage and loss of that collateral. We should all sleep easy. Because we know we can have in the back of our mind the Fed's reaction to 2008 when they bailed out the banks. We can cheer on as the Fed cuts the banks cash to replace their collateral losses, and they can carry on from there. For the rest of us, I guess we'll get about the same thing as before. But I want to ask you, what's going to really happen with all that liquidity, supposing that they actually do this? Where does it go? And for what is it used? Furthermore, what happens to the property, the actual land, all these losses occur on? Who ends up in receivership, basically a ruined asset? Is it the banks? They're not going to hang on to it. It's useless to them unless some other function can be found for the property in question. Do the states take it over? Where does it go from there? And what is going to happen to possibly the millions of Americans who no longer have a home but have a mortgage? Or will that be canceled? And where do they migrate to? Perhaps there's another place within the state that they can pick up the pieces. But it still will be in the context of a state that has suffered a major downturn in its own finances, just as there is an increased need to invest. For states like California, which I believe have a Band-Aid program that makes the state the insurer of last resort, remember also that if you insure a property against damage and loss, you have to pay money for it. And unlike the federal level, that comes out of taxes. The effect of this is conceptually very much like an eternal war, where cities are bombed into oblivion. It's not a very cheery outlook, but it is not an unrealistic one. Now more than ever is a great time to have a little chit-chat with your town council, with your state representatives, possibly the governor's office, and also your federal representatives, senators, and even the White House. And it would be a good time to start asking them if we can expect property to be repeatedly damaged to the point where the insurance industry falters. What happens to our home values? What does it mean, or what happens when 10, 15% of a state's population suddenly finds themselves economically dislocated? What happens to the state economy? What happens to the nation's economy overall? What does it even mean to focus on renewables when they themselves will be burnt to the ground and or swept into the ocean?